Hi everyone, welcome back to another lecture. In this lecture, we are going to start with another question, that is the portable garage company. This question is also basically based upon your, you can say, transfer pricing only. Moreover, like the profit that a company will be having based upon the different divisions. So you can say it's basically based upon divisional manager performance and all. So let's get started. Okay. Now, see, under the current transfer pricing system, prepare a statement, profit statement showing the profit for each of the division and for the portable garage company uh, as a whole. Your sales and cost figures should split into external sales and internal divisional transfer where appropriate. Ideally, you should never show as a total sales point. You should clearly specify from where how much is coming. That's the correct way of presenting your answer. Even if they don't have mentioned this thing, still do this thing in your exam. Okay. Now, part B is assuming that the new group purchasing policy will ensure the optimization of group profit. Calculate and discuss the number of adapters which division B should buy from division A and the number of adapters which division A should sell to external customers. 3 marks are available for calculation and 3 for discussion. Calculate and discuss what the minimum transfer price per unit would be for any additional adapters supplied above the current level by division A to division B so that division B can meet its maximum annual demand for the new portable batteries. Okay. Now let's look at it. How to do it. First of all, we will be doing the part A and where they clearly ask me to prepare the profit statement for the current position. But we have to read the question as well. Okay. The Portable Garage Company is a company specializing in the manufacturing and sale of a range of products for motorists. It is split into two divisions, the battery division, that is your division B, and the adapter division, that is your division A. Division B sells one product, portable battery chargers for motorists, which can be attached to a car's own battery and used to start up with the engine when the car's own battery falls. Division A sells adapters which are used by consumers to charge mobile devices and laptops by attaching them to the car's internal power source. Now, recently, Division B has upgraded its portable battery so it can also be used to rapidly charge mobile devices and laptops. The mobile device or laptop must be attached to the battery using a special adapter which is supplied to the customer with the battery. Division B currently buys the adapter from Division A, which also sell them externally to other companies. Okay. Now, data is given for me. Division A and Division B both. Okay. And there are three things. As a whole, your company, Division A and Division B. So we need to show the entire position of the company. Division B selling price, cost is given, demand same with the division A, selling price, external customer, how much they are costing, annual demand, maximum demand, everything. In addition to the materials and the labor cost above, division A incurs a variable cost of $1 per adapter for all the adapter it sells externally. Okay. Currently, head office purchasing policy only allows Division B to purchase the adapters from Division A, but Division A has refused to sell to Division B any more than the current level of adapter it supplies to it. Okay. They have denied to supply above. Now, after the manager of Division B is unhappy, they have a special industry contract who they could buy the adapters from exactly the same price charged by Division A if they were given the autonomy to purchase from outside the group. They are not given with this autonomy yet. Now, after discussion with both of the divisional manager and to ensure that the managers are not demotivated, head office has now agreed to change the purchasing policy to allow division B to buy externally, provide that it optimizes the profit of the group as a whole. Now, see, both are there. Division B used to buy the components from Division A. Now they require more. But your Division A has denied. Your Division B was unhappy. But now what your company head office has changed the policy that yes, you can buy externally as well. But you need to ensure that the entire company profit is getting maximized. Taking into consideration those parts. Now let's get started and let's prepare first of all profit statement. That's what they are asking, that what will be the profit statement for the current position of the business. So how can you do it? Let's see. Okay. So first of all, your particulars, and we will be calculating everything in the three zeros. No, let's calculate in full amount. Now, how many division? Your division B, first of all, it is given to you. Then division A is given to you. Then portable garage company co. Now, let's start from the revenue, sales revenue. Okay. External sales and internal transfer. Now, how much? First of all, my division B is buying. Correct. How much they are buying it? See, selling price is 180. Okay. Their annual production and sales is 1,50,000. Okay. So it's 1,50,000 into 180. Simple. For division B, division A, my selling price is 13 to division internal transfer. External is 15. What is my internal transfer? 2 lakh. Correct. And you're transferring at $15. Internally, how many units you are transferring? Obviously, as per the demand, 1,50,000 at $13. Up, you need to understand here one thing. Their current annual production capacity is 3,50,000, out of which 2 lakh their internal and one. Yes, they are operating at a full capacity. Okay. Now, what will be my, you can say, total sales? That will be this plus this. Acha, why you will not be calculating the internal sales here? You need to understand that internal sales you cannot take into consideration. Why? If you think from PCG company, matlab as a group point of view, don't you think so that will be nullified? Ultimately, that is division A revenue. But for that will be division B, my selling price, variable cost. So how can you consider it from the PCG point? You cannot. So my revenue will be total revenue. No. Variable cost. Correct. Now let's calculate. Variable cost from external sales, internal transfer. Correct. Internal transfer cost. Your labor cost is also given to you. Now see, my external material cost will be for division B. It will be how much you are buying. 1,50,000 units you are buying. For how much? $13. That will be a cost to them. And internal transferred cost, up you need to look after it. What will be your internal transferred cost? This is my internal transferred cost only. My external material cost will be how much? $45 into 1,50,000. Correct. Now, what is your labor cost? It is given $35 per unit. So how many units you are manufacturing? Obviously 1,50,000. Right now. My the next thing is here. How much cost I am incurring to make a adapter? $3. My how much will be the $3 cost that is arising? 3 into how many units you are selling? You are selling 3,50,000 units, isn't it? How 3,50,000? 2 lakh to your external customers and 1 lakh 50,000 to your internal. But ultimately, the variable cost will be same only. That's how you are getting it. Now, moving ahead, the next thing that you will be having is your labor cost. How much is your labor cost? $4. And how many units you are making? 3 lakh 50,000. Correct. Now, it's written here. Any other cost that is given to me. See, in addition to the material labor, division A incurs a variable cost of $1 per adapter for the all the adapter it sell externally. So 2 lakh 1 lakh 50,000 sorry 2 lakh adapters, because whatever the adapters they are selling externally it is incurring $1 per, and 2 lakh is what you are selling externally, and 1 lakh 50,000 internally. Correct. So how can I do it? Now this is my other cost for external sales. Up, how much cost you will be reflecting here? This plus this internal transferred sales will not be reflected. Why? When I haven't reflected here revenue, why will I reflect here cost? You will not reflect the cost. Now, what is your total variable cost? I would say here to leave a line space so that you remember that yes, these things need to be later on subtracted as well. Total variable cost. This is what is the total variable cost that you will be incurring. Correct. Now, what is your contribution? Contribution is your revenue minus the variable cost. Correct, we got the contribution. Now what we will do, we will subtract your fixed cost. How much is my fixed cost? 5460, 1 2 3 zeros more. Here, my fixed cost is given to me. Current annual, okay, 2,200,000. And this one will be how much? Sum of both. Was so what will be my profit? So this is what my profit is. Got it? So that is how basically you can do the in exam. Moving ahead. This is what my part A is completed. Now let's move to part B. Part B is saying that assuming that the new group purchasing policy will ensure the optimization of group profit, calculate and discuss the number of adapters which division B should buy from division A and the number of adapters which division A should sell to external customers. Okay. So let's get started with it. Okay. It's quite simple, see. You need to understand first of all, every company will looking after it uh, to maximize their division profit, because ultimately they get the bonus and all. If I look after it, how can I write it? Just 6 marks, and out of which 3 marks is calculation. It's not like calculation you have to show separately. When you will be explaining, then only you can be write it down. How? Let me tell you. See, if division buy can buy the adapters for another supplier for $13 each. So what will be the best strategy for division A? To first sell as many as adapters it can sell the outside to the customer at $15. Right. And whatever is left behind, they can sell it to the division B on the agreed price. This can be done or no, the first thing. Now let's write it down. First point is this only. If division B can buy adapters from external supplier from for $13 each, or for $13 each. That is what is mentioned. Correct. The best strategy, what will be the best strategy? Is for division A to first sell as many as adapter it can to outside customer at what price? At $15 each. That is what they can do. So whatever has left behind, in this what company can do? Then they can sold to division B as an agreed price. Can be sold to division B at an at a price they both agree on. Correct. Up in this case, what is happening? My division A sells 1,50,000 adapters to division B. Correct. And division B by the remaining. How much remaining? See, my division B external demand is 2 lakh, that is 1,80,000. If you look after, the demand is 1,80,000, but they are able to fulfill is 1,50,000 only. It's written. Isn't it maximum annual market demand for portable batteries 1,80,000? So 30,000 is more demand. And why I'm writing here? I should ideally write it up. Correct. And division B, what can my division B can do? Division B buys the remaining 30,000 from an outside supplier. Correct. This is because अब you need to understand now on an average how much profit a company is able to make on each. They are able to make a good profit, isn't it? Your selling price is 1,80,000, right? If I do it roughly, and 13 plus 45 plus 35, you can make the good profit. And here, the material cost of making itself is $7. If you look from that perspective, from the division A perspective, that is costing them itself $7, right? And how much profit they makes? They make a profit of, obviously, if you look after from external supply, 50 minus 3 minus 4. 4 is what? And $1 extra here. One extra for external sales. So $7, right? You learn, we have solved above now that $1 extra, even it is mentioned below, that to an external supply you will be making. Correct, because this is because division A makes up a $7 profit for each unit sold to external customers. Okay, that will be $15 minus $3 minus $4 minus $1. Correct. So if division A, what happened to your division A? Give up some external sale. In that scenario, what will happen? The group will be losing $7 in profit per unit. Yes or no? $7 in profit they will be losing. So this is what I have mentioned now. I can mention that obviously other hand, on the other hand, what will happen? If division B buys from external customer, then what will happen? Supplier, sorry. Instead of getting the adapter from division A, in this particular situation now, the extra cost to the whole group is only, how much is your extra cost? $6. Why? Purchase price of $13. Sorry, purchase price is $13 and $7 is to make in house. So, somehow you were offering it to the $13, but group profit will also be reduced, no? Yes or no? It's not like that my another division was not making the profit. That were making the profit. Is only how much? $6. How $6? $16 was the purchase price. Uh, minus $7 in-house manufacturing. Correct. That is what you need to give up. So it is smarter. What is smarter? For the group overall, if division A, what division A do? Focus on selling first of all to external customer, then internally. Because you need to understand one more thing. When company transfers sells the goods your internally, oh, sorry, externally. Until and unless you will not be catering the demand, you will not be able to capture a good market share. And at the end of the day, every company wants that yes, organization as a whole can capture a good market. Correct? That's what happens basically. Now, moving ahead, what I am supposed to do is my part C last. For 5 marks, calculate and discuss with the what the minimum transfer price. Similarly, you will be writing here. It's not like calculation will be too huge. Okay, you will be writing the normal thing. Now, what they are supposed to do is they just ask me calculate and discuss what the minimum price per unit for would be for any additional adapter supplied above the current level by division A to division B so that division B can meet its maximum annual demand for the new portable batteries. Okay, let's look into it. 5 marks. Okay, and 2 marks are for calculation, 3 marks are for discussion. So you need to understand that I can say that to supply 1,80,000 adapters to division B, division A have to cut off their external sales from 2 lakh to how much? 1,70,000, because you need to see that their total operating capacity is 3,50,000, out of which 1,50,000 they were already applying, and their external sales is 2 lakh, but they were able to fulfill. So they need to cut it down. The first point, let's write down. To supply 1,80,000 adapters. To whom? To your division B. What will happen? Division A has to cut the external sales demand from 2 lakh units to 1,70,000 units. Correct? Since its operating capacity is has spare capacity for 1,50,000 only after the external demand. So only 1,50,000 is the spare capacity. Yes or no? Up what you can write the more. Definitely, I will not get the marks only. So when there is no capacity, we know very well the minimum transfer price should cover the both marginal cost and the opportunity cost. Correct. And when there is no spare capacity, then what you should do? Then minimum transfer price should cover. What it should cover? Both marginal cost and opportunity cost. We have learned about now what is the opportunity cost, the best next alternative foregone, and we covered the both things. Correct. So here, what is the thing? The cost to make one unit is $7, and the profit loss from not selling externally. Externally is $7. So the transfer price would be how much? The transfer price would be $14 in per unit for extra 30,000 units. This is what you were supposed to explain them. That's because what they're asking me is about simply how much will be the, because you know very well this principle I have already told you that what is my principles that we follow whenever there is these type of external demand or something come up. So that's what is happening here. So that is what is more about your this type of transfer pricing question. Okay. And you need to understand that transfer pricing question you can expect from multiple areas, from multiple times. And it's not like it's tough. It's just whatever they're asking us to do in the question, if we are able to analyze it properly, then the I can solve any question. Whatever is the question that examiner give it to you can 100% solve it. So that is what is moreover about this lecture. I hope you have understood this question. Thank you so much for watching.